Hi, friends. This is Jay Sexton at Sexton Financial Mentoring. In this episode, episode 2, we're going to cover populating the savings and debt tabs. The savings tab, of course, is where we're going to keep track of all of the things that we are categorizing for our different savings goals. Things like property tax, if you don't escrow that, Christmas, birthdays, all of those annual things that you know are coming every single year, as well as long term savings plans. And I'll show you how to separate that out. Just as a reminder, the bank is not going to have any idea of these different categories you have. They only know your balance, but your balance at the bank should always match your balance in the budget spreadsheet on the savings tab. But we will categorize our savings so we know which dollars are meant for which savings categories. And in the debt tab, hopefully you have very little or no debt. That's the goal. But we will prioritize our debt in a couple of different methods. I'll show you the most popular methods are what's known as the avalanche method and the snowball method. And I'll go over those and how those are set up differently and approached differently. But we'll make sure that your debt's counted for. And then we'll show you how to apply extra payments to the debt that you're trying to pay off first, and then how to go through those from there. And then in the future video, we'll show you how to set up the actual um, the budget checking account, how you're going to deal with that every single day, and how that references the savings and those debt tabs. So if you're ready to go, open up your Excel and let's go. Okay, we have our budget spreadsheet pulled up with the savings tab. This is what you should already have built out from the first video, building a budget template, where we had the checking, budget, debt, savings, and blank form tabs all completed. If you haven't watched that yet, it'll be harder to catch up and build all this as we populate it. So I'd encourage you to go watch that first video so you're starting in the same place. Again, these little notes I have in highlights here, you don't have to put those in your version. You're welcome to, of course, but I just have them in there for the video just as reminders. So we're going to start with the savings tab in this one. Now these two tabs, the savings and debt that we're covering now, will take a little bit of preparation before you can actually populate this, because if you haven't done budgeting before, it's very unlikely that you just know off the top of your head what you spend every year on these recurring things. You hopefully have an idea about your property tax if that happens to be one of your savings categories. Hopefully you know that. But Christmas, you might have an idea of what you spent last year. But now it's time to decide, instead of how much did I spend last year and just remembering it, you're going to say, this is how much I'm going to spend this year, and you're going to stick to that. Same thing for birthdays. Can you think off the top of your head over the past year, how much did I spend on everybody's birthdays? Everybody that I bought a gift for their birthday, what did I spend for the whole year? You probably don't know that off the top of your head. Well, now's the time to sit down and plan and say, this is how much I'm going to spend on birthdays. And maybe you'll want to make a list. Maybe you make a list even down here. Put everybody's name that you plan on spending for their birthdays and how much you intend to budget for that person's birthday. And then you'll have a total that you can put up here. If you're saving for a vacation, you need a savings goal. First of all, how much do I need to save overall, and how much do I need to save each year to get there? If you take a vacation every year and you want to save up that much for that year, at least you know you need a budget and say, this is how much we can afford to spend. Or maybe you can't afford to save that up in 1 year, and you might put this down here in long term and add a vacation, and each year you'll decide, okay, I want to take a vacation in 3 years. Here's the budget we want to have for that vacation. Let's divide that by 3, and that's how much we need to save each year to get to that point. And so I can do it that way as well. So it takes a little bit of prep before you can actually just start throwing numbers in here. But I'm going to build this out based on some averages. And again, the examples that I use are just US averages for what people spend and what their expenses are and so forth. Yours very likely will be different. So don't compare yourself to these numbers. They're simply for example on how to do this. Well, first of all, we've said that if you have debt, the first thing that you should be doing is saving up for this emergency fund, this emergency savings, which should be $1,000 plus $500 per car and per child up to $3,000. The example that I'm going to give as we go here is a family of 4, and the spouses in the family both have a car, and they have 2 kids that aren't yet of driving age. So they have 2 cars and 2 kids. So they're going to hit that $3,000 maximum. $1,000 plus $500 per car. There's 2 cars, so that's another $1,000. That makes it 2. And they have 2 kids, so that's another $1,000. That makes it 3. So we're going to change this to $3,000. I may change the year too because I didn't carry that over from the first video. We'll go with the current year, 2023. So right off the bat, we need an emergency savings goal of $1,000 plus 500 per car and per child. So in my family's example, their goal is to have a $3,000 savings, emergency savings. Now let's say they're working on that. Let's just say they're halfway there. So they don't have their emergency savings yet. We're going to show you how to account for that when we get to the budget and the debt tabs. We're going to assume that this family does not escrow their property tax, so we'll take that out of the brackets and say that that's a real annual amount that they're trying to save for. And we're going to say that their property tax, I'm in Illinois, so I'm going to give them a ridiculous average property tax amount. I'm just going to say $4,000. Some of you, if you live in Illinois, might think, oh, that's not too bad because Illinois has outrageous property tax. Christmas, I think most people can agree that we're going to spend on Christmas. Now, here's one where you have to say to yourself, what am I going to spend? How much am I going to spend on Christmas? You need to make that decision and then stick to it. So our family here, we don't really know what their normal Christmas is like, but we're going to say that they're going to spend $1,000 on Christmas. If you have two kids and any other extended family, and if your spouses buy for themselves, you'll know anymore that's really not very high, and yours could be a lot higher than that. It could be a lot lower than that. We've looked at birthdays here, and we're going to say that this family is going to spend $400 a year on birthdays. Again, with two kids, that might be kind of low. In fact, it is a little low. Let's change that to 600. We're going to go with 600. Now we're going to say that our family cannot afford to take a vacation every single year, but they want to take a vacation in 3 years, like I said before. So we're going to say that the long-term goal for the vacation is we're going to say $3,000. So that means they have to save $1,000 every year to get to that point. And so what's going to happen is however much they can save up toward that goal, if they can save up the whole $1,000 for the year for that goal, when we do the next years, we'll erase that. This will be zero again, but we'll move that $1,000 down here because that's how much they've saved overall towards their goal. We'll make that a zero to start with. And then we're going to say that this family is saving up for a new car. That's one of the things that they want to save up for. Their new car goal in the long run, they're not going to save up for the whole amount. There's a lot of finance people out there that'll tell you don't buy a car unless you can pay cash for it. That was all fine and good several years ago when car prices weren't outrageously high. There's also an opportunity cost argument to be made if you can get a decent interest rate. But we're going to say that they want to save up $4,000 for a down payment on a car. Now, in our family's example, that's not going to be part of their annual savings because they can't afford to make that much. Now, any extra money that they can make by doing side hustles, or if they have a nice garage sale or any other extra money gifts that people may give them financially, they're going to put toward this new car goal, but they're not going to be able to include it in their normal savings. That's a pretty normal event. So this is filled out now for just what we know that they're going to spend. First of all, they're really working initially towards their emergency savings. Most people, in fact, the last statistic I saw said that it was like 10 or 12% of people have a liquid, meaning easy to get to cash emergency fund. So it's very likely that you're in the same situation. You don't have a liquid emergency fund. So that's where our family's going to start. And then every year for right now, they're saving up for their property tax, Christmas, birthdays, and vacation. Their vacation happens to be a long term. They're not going to take a $1,000 vacation this year, but they're saving up for a $3,000 vacation. They're just going to try to save up that much each year. And any extra cash that they can pull together, they'll put towards a new car. These reserve funds, we're going to talk about those later in another video when we fill out the whole budget, and I'll show you how those reserve funds work. They will be part of your savings account, so that's why they're here, but I don't want to get into that right now. We'll look at how they work a little bit later. So we're going to assume that for next year, remember budget year plus one is next year, we're going to assume that we have the same categories. And instead of rewriting all those, I'm just going to copy them, make this efficient. So we're going to say next year we want to save up for those same categories. And we're going to say, you know what, the year after that, we want to save up for those same categories again. The yearly goal may be the same. We're going to say for right now that it is the same, although we know, especially if you live in Illinois, that your property tax is probably going to go up. So you know what? We're going to say next year, let's say it's going to be 4,200, and the year after that, we're still going to say 4,200 because I don't want to try to guess that far ahead. But I'm going to plan for a little bit more next year, and then when we move this stuff over to here for 2024, maybe we'll change that if we expect it to go up again. But for right now, we're going to leave these two the same. And we're going to say right now they also don't really have any new savings categories that they want to try to tackle. Now you'll see what happened over here. We covered this a little bit before. Let me actually I'm going to add a cell divider here because it got lost in the formatting. I'm going to use this right border. And what I did was I just made a border between those two, and this one's missing its border as well because I added those. And sometimes when you add cells in the middle of other cells, they'll lose their border, and you just got to kind of go back and fix it. Oh, it's missing from that one too. Let's fix that. You can do the formatting however you like. I'm just a little particular about it, so that's how I want it to be done. So before, when we built this out, we know that this is our yearly goal. Well, that's all fine and good. I know how much I need to save for the whole year, but that I need to know how much that is each month. And then we'll plug this into the budget tab when we get to that video. And you'll see how this particular cell right here is going to dictate how much we save each month during our current operating time. So within our actual current budget. But for right now, we're just going to ignore that. It's an automatic calculation because we built that before. It's B6 in this example, which is the yearly total divided by 12, which tells us this is how much per month we need to put into our savings in order to meet these savings goals. Now, here's the thing. Right off the bat, you're jumping into this new, and so you probably haven't even started this. So that's the reason why we're using this, and we're planning for next year's. For the current year, you're going to have to address these the best you can and plan for them the best you can. We're still going to have a goal here. So obviously, if you start this in November, you're probably not going to hit that $1,000 Christmas goal unless you've already been saving all along. This assumes that it's nice and clean and starts on January 1st, which is what happens here. That's why we use this one going forward. Here, it's going to be a little bit messy the first year, depending on where you start. If you start in January, great, but it's already April. So if you're starting right now in April, you've already lost a quarter of the year. That's going to make these harder to catch up to. So maybe you don't want to have them at those levels this year. That's totally up to you. Just understand that when we work on the budget, we're working toward next year. This year, you'll just have to figure it out like you have been all along. So really, the savings tab is finished for now. We've got some things that this family is going to work towards, and we'll talk about the reserve funds a little bit later. So let's jump over to the debt tab. Now, we covered before, you can either work from highest interest down or from lowest interest up. Most people work from lowest balance. I'm sorry. Most people work from lowest balance up because they really like to see those accounts go away. They don't want to see that they have a lot of accounts. And if you're a big math person like I am, you hate the idea of paying extra interest. You might want to work from the interest down. For this family, we're going to let them work from the lowest balance up. So we're actually just going to get rid of this altogether. I'm just going to highlight it. I'm going to hit delete, and then I'm going to go up here and remove the highlighting, and we're going to unbold that. So that's not there anymore for this particular example. We're going to work from right here. So the very bottom one for this family, and again, this is their example. We're going to say that they have a Discover card that has $900 on it, and their minimum payment we're going to say is $70. Now this minimum payment, which belongs right here, and I need to change that to make sure that we have accounting format. When I had text in there, I hadn't changed it yet, and the same for here. So if you hadn't changed those to accounting yet, go ahead and do so now. You'll see that the total balance is here from this one Discover card right now, and the total minimum payment is right here. So what's going to happen then is this as you see by the note, is actually going to change later when we do our budget. Because right now we don't know how much we have left over. We haven't looked at income. We haven't looked at all of our monthly expenses. We're just going to start by putting the minimum payment here. Whatever money we have left over, I'm just going to jump real quick. You know from before that we've said that anything left over is going to be our extra debt payment, right? So we don't know that yet. So let's not worry about that yet. Just put in the minimum amount. That's not going to be their only credit card though. Let's say they also have a city card, and that city card has a balance of, let's say it's $1,200, and their minimum payment on that is $110. So you see, we're putting these in order of the lowest balance, and we're going up. That way, we're working on the one that we'll get rid of the fastest. They'll have different interest rates. I'm not going to put the interest rates in here because I'm working on the balance. If you want to put them in there, that's fine. If we were working it the other way from interest rate down, highest interest rate down, I would put the interest rates in here. It's not a bad idea to know your interest rates. So I certainly don't discourage you from putting them in there. I'm just not putting them in there for this example because we're working from the lowest balance up. So right now we have a $2,100 total credit card balance and $180 worth of payments each month. Let's say they also have a Visa of some kind, and it has a $1,500 balance. And let's say their minimum payment on that's $140. So right now they're at $320 a month for their total credit cards. And in this example, we're going to say that's all the credit card bills they have. You might have more. I've worked with clients who this wasn't enough room for all of their credit cards that had actual balances, and we had to make this bigger for them. It's okay. If you have a ton of credit card debt, you are not unusual in that sense. A lot of people carry heavy credit card debt. If you have no credit card debt, congratulations, that is awesome. I hope you don't have to work in this field at all. But the reality is most people do, so that's where we're going to work from. So now you've got all of your, hopefully, all of your non-mortgage debt accounted for in here. Now, non-mortgage debt will include cars. So anything that's not your house. So you might have a boat or an ATV or other such toys that you have loans on. You might have student loans. That goes in here too. So we are going to add a couple of other things up here. I'm just adding them up here because I like to separate unsecured revolving debt like credit cards from other types of debt. So I'm going to put up here, we're just going to call this car payment number one. And in my example for this family, they have two cars, but they only have an outstanding loan on one of them, and they're saving for the other one, as you saw in our other tab there. So the balance on their car payment that they're still paying on, let's say, is $12,000. We're not going to worry about the interest rate, but their payment on that each month is $360. So that just goes up here because I like to keep those separate from credit cards. If you don't like this extra space in here, and I'll show you in a second what I'm going to do with that, you can feel free to just put them right here where the other ones go. And like a lot of people also are struggling with right now, they have a student loan. We're just going to say student loan. We're not going to say number one because they only have one. And we're going to say that they still owe $7,000 on that student loan, and the minimum payment on it's $150. So they have $830 of non-mortgage debt that they're paying on each month, but they're paying it off in the order of lowest balance first. So that's how we've had them ordered here and arranged here. Now, if you have a credit card that has a higher balance and a higher minimum payment than your student loan payment, then by all means put these together and move them down. It doesn't matter how you arrange them. This is just how I like to keep them separate. It's totally up to you. It might help you to keep them all together. It's totally fine. However you want to do that, as long as you've accounted for them and you put them in order, either by lowest balance first and working up, or highest interest on the top and working down. Either way is fine. If you have some other way you prefer to attack it, by all means, just be sure that you're attacking it. So now we have all of our non-mortgage debt included in here, and it's accounted for. We have our total balance for everything, and we have our minimum monthly payment for everything. Going back to savings, we said they were trying to save for a new car. They have a car payment now that's $360 a month, but they are trying to save for another car. and we're going to say that they plan to save $200 a month for that car. But they're not going to account for that in here because what did we say? That's going to come from extra money that they can sell from, with garage sales, or if they can earn some side money from working overtime or whatever else. So we're not going to put that in there. It's not going to be a monthly expense. We're just going to put money in there when it comes up. So when we get to the videos where we're doing the actual checking, the interacting with our budget on a regular basis, we'll have examples where I was able to work some overtime. I got an extra $300 on my check. We're going to, if as long as we have this out of the way, we're going to send some of that to the new car fund, and we're going to send some of that to pay extra on debt. Now, you may not like that. You might be the person who says, I'm not spending a dime on anything until my debt's gone. That's totally fine. I'm not suggesting you do it one way or the other. I'm just suggesting that you track it and plan for it. That's the biggest thing. So now you should be good on your savings tab and your debt tab, at least in our setup. On the next video, we'll set up the budget tab, and then subsequent videos after that, we'll look at actually using the checking account going forward. We'll have lots of examples. We'll have lots of videos of different situations that affect this family that you may relate to, and we'll explain how to use the reserve funds that you'll wind up with here. I mentioned this in the first video. I'm just going to mention this again. This savings tab does reflect your actual savings account at the bank. So you should have a savings account, and we're going to work in it from here. Now, the savings account at the bank has no idea that you have these categories. All they know is that you have a balance. The balance on your savings account at the bank should match your total right here. We are separating it on our budget into these different categories so we know which dollars belong to which categories. Again, at the bank, they have no idea about that. They only know that here's how much money you have in your savings. That's it. We're going to divide it up into these categories so we know what it's being planned for and how it's being used. So again, watch for the next video where we'll do the budget. And I hope you've looked at the first video on setting up the original structure. That'll help you jump into these and get moving a lot faster. Thanks for watching, and thanks to all of you who have supported SFM in the past. While we do not charge for our instructional videos, we do need your support to keep them free. Any amount from $5 to $10 if you found the video helpful, to $50 or $100 if you'd like to make a donation on behalf of those who can't, or any amount in between is greatly appreciated. You'll see here a few convenient ways to contribute, and every single bit helps to keep our mission going, including subscribing to the channel and sharing the videos, so please do that too. Until next time, remember to sacrifice while it's voluntary. Bless you all.